Alright students, the next chapter which we are going to discuss now is the chapter of value of supply. Yes sir, let's go ahead and start the chapter. Let's take a quick linking first of all. We started learning GST with everyone with me. We started learning GST with goods or service. Goods or service has to be supplied. Supply can be either interstate supply or supply can be either intrastate supply. Interstate supply IGST will be levied. Yes, sir. Intrastate supply, sir, CGST will be levied. Once GST is levied, GST has to be collected and paid by a taxable person. In this between collection and payment comes exemption. Okay, sir. Point is clear. Now, once GST is levied, some people also went ahead and asked for composition levy. Yes, sir. Point is clear. Some people also asked for composition levy. Listen to me very carefully now. Once goods and services are being supplied interstate or intrastate, GST shall be levied. GST shall be collected and paid by a taxable person. Once it is to be collected and paid by a taxable person, sir, how will he collect and pay? You will have to go ahead and calculate GST is equal to value of supply into rate of tax. Everyone listen to me carefully. Can we have a quick section revision? Yes, sir. Sir, goods section number 252, services section number 2102. Goods and service has to be supplied. Supply section number 7 of the CGST Act. Supply section number 8 of the CGST Act. Interstate supply section number 7 of the IGST Act. Then we had section number 8 of the IGST Act. Then we had section number 9 which went ahead and told about territorial waters. Section number 10, 11, 12 and 13 talks about place of supply. 14 talks about OIDAR related special provision. 15 went ahead and told about tourists. And 16 told about zero rated supply. Sir, IGST ka levy section is section number 5. Sir, CGST ka levy section is section number 9. Section number 9.1 general levy. 9.2 HP man. 9.3 diagrams for reverse charge. 9.4 sir, reverse charge mechanism on promoters. Yes, sir. We remember ICC. 9.5 housekeeping accommodation, transportation services. Composition levy, section number 10. Then, exemption, government had the power under section number 11 to go ahead and give exemption with respect to CGST. Section number 6 with respect to IGST. Taxable person, we went ahead and learned. Section number 22, people who are liable. Section number 23, people who are not liable. Section number 24, compulsory registration. 25 told about the procedures. 26 told about deemed registration. 27 told about CTP and RTP. 28 amendment. Sir, then we had 29 which told about cancellation and 30 told about revocation. Here rule number 23 amendment is there. Be very careful. Now the next chapter comes value of supply. Everyone listen to me very carefully. In value of supply chapter we have section number 15. We have section number 15. Section number 15, in section number 15, we have section number 15.1, which goes ahead and says value is equal to the transaction value. 15.2 talks about the various things which are to be included. Section number 15.3 talks about the discount which is there. Yes, sir, we remember. Then we have section number 15, section number 15.4, which talks about the various valuation rule. And then section number 15.5, which goes ahead and says government can go ahead and notify some rules for some specified supplies. Okay, sir. Chalo, we'll go ahead and start with value of supply. Everyone over here. Value of supply. Section number is, sir, how do we go ahead and determine GST? GST is equal to value multiplied by rate of tax. Rate of tax will be always given in your question. Value, you will have to go ahead and calculate. Value in GST is calculated as value is calculated under section number 15. So section number 15 goes ahead and says if the value is ascertainable, yes sir, the value is ascertainable, then value of supply is always the transaction value. Whatever price may transaction is happening, but transaction value, sir, what do you mean by transaction value? Transaction value means the price which is paid or payable when the parties are unrelated and the price is the sole consideration. Only money is given. For an example, I give you the class for 10,000 rupees. When I give you the class for 10,000 rupees, 10,000 becomes the transaction value. That is the price which you have to pay, or might be you told after 2 months you will be paying it. So price which is payable. We both are not related as per GST. As per GST, we are not related, and you have gone ahead and paid me only money, then that amount will be taken as transaction value. Okay, sir. Point is clear. Sir, what if money is not the whole consideration, there is barter which is happening, might be there is exchange which is happening, then always remember, if money is not the whole consideration, in that scenario, sir, rule number 27 of the valuation rule is applicable. Sir, what if the parties are related? In that scenario, rule number 28 is applicable if the parties are related. Sir, then we have rule number 29, which goes ahead and says if the supply is happening between principal and agent, then rule number 29 is applicable. We'll be learning about it. As of now, I went ahead and told you value of supply has to be determined as per section number 15. Section number 15(1) went ahead and told, please take the transaction value. Okay, sir, transaction value is your value of supply. Now, there are some things which are to be included in the value of supply. That is told by section number 15(2). Section number 15(2) goes ahead and talks about the various things which are to be included in the value of supply. And in that, there is given TOPICCS. No, TOPIICS. Topics are to be included in your value of supply. What do you mean by topics? Any taxes, duties, cess, fees other than GST. For an example, tobacco is sold. When tobacco is sold, along with tobacco, excise duty is charged. When you are going ahead and calculating the value for the purpose of GST, sir, sale value, the value plus the excise duty has to be included. Always remember, any taxes, duties, cess, fees other than GST has to be included in the value. But here you have to be careful. One thing is told that, sir, any duties, tax, cess, fees other than GST has to be included. But TCS, which is charged under Income Tax Act, TCS is not to be included. Baba, TCS is not a tax. TCS is just collected so that government comes to know who is this person who is going ahead and supposedly buying a car more than 10 lakh rupees. Then the car seller goes ahead and collects TCS and gives it to the government so that government knows about you. That's all. That's all. And hence, they have gone ahead and told TCS under income tax is not to be included in the value. Okay, sir. Any taxes other than GST include, TCS don't include. Then O for obligation of the supplier, obligation of supplier made by the recipient. For an example, I have gone ahead and supplied you something and you have gone ahead and paid on my behalf to someone else. So, sir, my obligation, if you have gone ahead and made, that is also a consideration and that is also to be included in the value. Okay, sir. Then P for packing charges. Sir, if there is any packing charges which are being charged, packing charges, whether I have gone ahead and charged you for special packing, general packing, whatever packing charges are to be included. I for incidental charges, any incidental charges, any incidental charges which are charged by the supplier, might be I have charged you design charges, might be I have gone ahead and charged you packing charges, design charges, weighment charges, any charges if I have gone ahead and charged you which is with respect to the supply, then Baba, that is to be included. I for interest, penalty and late fee has to be included. If I have gone ahead and supplied you the goods and you have not gone ahead and made the payment to me on time and I have gone ahead and charged you some interest, that is also to be included. But interest, penalty and late fee, one thing you have to see. Always you will see in your exam what they are going ahead and doing. You will see IPL is always assumed inclusive of GST, and whenever you are going ahead and adding it in the value, please make a back calculation. Amount divided by 100 plus rate multiplied by 100. Only the amount which comes has to be included in the value. Okay, sir. C for commission. Any commission which is being charged has to be included. Selling commission, buying commission is not to be included. Buying commission is not to be included. Be very careful, everyone. As for subsidy, any subsidy which is being given has to be included other than government wala subsidy. Government wala subsidy don't include it. The same thing has been told over here. You have to remember taxes other than GST, but remember, TCS is not to be included. Any obligation of the supplier made by the recipient has to be included. Any incidental charges, see over here, everyone. I for incidental charges, C for commission, I have already told you, packing charges or any amount charged for anything done by the supplier with respect to the supply. Might be I have charged you weighment charges, I have gone ahead and charged you designing charges, all those charges has to be included. Interest, penalty and late fee also has to be included. Subsidies linked to price also has to be included, other than government subsidies. Okay sir, point is clear. We will be very careful people. You have to be very careful. Any subsidy other than government subsidy, okay sir, which is linked to price. Section number 15, I went ahead and told you section number 15.1, transaction value. Section number is the value of supply. Section number 15.2 told in value of supply, please include TOPIICS. Okay, sir. Section number 53 talks about discount. Now, let's go ahead and understand discount. Everyone over here. Now, discount are of two types. One is a discount which is given before or at the time of supply. If the discount is given before or at the time of supply, do not include in the value. Always remember, for an example, you went to buy a jeans pant, the shopkeeper charged you 10,000 rupees. 10,000 rupees, he gave you immediately 5,000 rupees discount. In the invoice, it is shown that he has gone ahead and given you 5,000 rupees discount. Then the value of supply may 5,000 rupees discount will not be included. Only 5,000 will become the value of supply. For an example, you went to buy a jeans pant, 10,000 rupees. He gave you 5,000 rupees ka discount and 5,000 is the remaining amount. Transaction value is 5,000. You would have paid him 5,000 rupees. Yes, sir. Do not include discount. Your value of supply will not be 10,000. Your value of supply will be only 5,000 rupees. Always remember one thing. If discount is given before, then it is always to be excluded. Do not include in the value of supply. Okay, sir. Now, if after supply any discount is given, might be year-end discount is given, turnover-based discount is given, then always remember one thing. Prior agreement for such discount exists. Is there any prior agreement which is there for that discount? You have to see that early condition is satisfied. Only then the discount is to be excluded from the value. Otherwise, discount will not be excluded. For an example, I went ahead and sold you some goods and year-end pay, any discount is being given. Now that discount, will it be excluded from the value or not to be excluded? You have to see early condition. Number one, agreement between me and you. Is it there? Number one, agreement is to be seen. Number two, every discount which is there is to be specifically linked with the invoice. And I for ITC, when I go ahead and give you the discount, I'll issue you a credit note, and on the basis of the credit note, you have to go ahead and reverse the extra credit which you have taken. If all these three conditions are satisfied, what is the three condition? Early condition. Agreement between me and you is there that year-end pay I will provide you the discount. Secondly, the discount which I am giving you, I should be specifically able to link which invoice related discount I am giving you. Thirdly, when I am going ahead and giving you the discount, I will issue a credit note. ITC ka reversal has to be done by you, because when I had not given you the discount, I had charged you more GST. Now when I am giving you the discount, whatever ITC is there, that has to be reversed by you. Only then discount will be excluded. Otherwise, discount will not be excluded. Done, sir. Point is clear. Now here, very important point to remember is interest, penalty and late fee. Whenever they give in your exam, please assume that interest, penalty and late fee is inclusive of GST divided by 100 and whatever, 100 plus the rate of GST multiplied by 100, and that amount you add it to the value, and also write a specific note. Whether CA, CS, CMA student, you can go ahead and write a note at the end saying we have assumed interest, penalty and late fee to be inclusive of GST. I hope everyone is clear. Or on a safer side, you can also do one thing. You can say if not assumed inclusive, this total amount shall be added to the value, so that you are on a safer side. Done, sir. Point is clear. Next, we went ahead and learned what, sir? We went ahead and learned section number 15 now. Section number 15.1 told transaction value is your value of supply. Section number 15.2 told transaction value is your value of supply. Section number 15 told in your value of supply, please include TOPIICS. Then section number 15.3 told discount. Discount ke liye, if discount is given before, discount is given after. Before, then excluded. Discount is given after, then you have to see if early condition is satisfied, then you have to exclude it from the value. Otherwise, do not exclude. Done, sir. Point is clear. Now we have section number 15.4. They are going ahead and telling if your value could not be the transaction value, means transaction value is not ascertainable. Might be there is, everyone remember, there is supposingly the money is not the whole consideration. or might be the parties are related, then in that scenario you have to go ahead and apply valuation rule. Everyone listen to me very carefully. Section number 15.4 goes ahead and talks about the valuation rules which are there. It says section number 15.1 may you could not determine the value, please come to the valuation rule, we'll go ahead and help you guys. Now it says over here we have valuation rule number 27, then we have 28, then we have 29. There are three valuation rule, then we have valuation rule number 30, and then valuation rule number 31. Very, very important for your exam is the valuation rule. Let's go ahead and start it. Everyone over here, when money is not the whole consideration. For an example, what do you mean by when money is not the whole consideration, sir? I went ahead and sold you the goods, you went ahead and paid me some money, and you went ahead and gave me some goods. Might be there is an exchange which has happened. When money is not the whole consideration, might be there is a barter which has happened. When money is not the whole consideration, always remember one thing. Number one, open market value of the supply. What I have gone ahead and supplied you, of that, what is the open market value? That will be taken as the value of supply. Open market value, yes, it is available. That will become the value of supply. No, sir, open market value is not available. Then what you have gone ahead and given me, I supplied you, that ka open market value is not there. For an example, you went ahead and supplied, you went ahead and paid me some money, okay, 2000 rupees. You gave me your watch. Watch ka fair market value in the market is 1000 rupees. Then that will become the value of supply. Okay, number one, what I supplied you, that ka open market value, that is not available. What you gave me 2000 rupees plus what is the item you gave me of that fair market value. If that is available, okay. If that is also not available, what I gave you of that open market value is not there. What you gave me fair market value not able to determine, then government is going ahead and telling, Ramesh, when what you supplied of that like kind and quality ka price has to be taken. Value of goods, services or both of like kind and quality, if it is available, that will become the value of supply. If that is also not there, what you gave me, that money I have to see 2000 rupees, but what you additionally gave me might be an watch of that fair market value is not there. Then what I have to do is, your watch which you gave me of that monetary value of the additional consideration, I'll have to try to find out by applying rule number 30, which is telling based on cost, 110% of the cost of your cost of acquisition, 110% of your cost of production or cost of service has to be taken. If this is not possible, then we'll have to go to rule number 31, which says residual method, means I will have to apply best judgment and do the valuation. Value of supply reasonable means has to be adopted. Apply section number 15 plus earlier rules. Apply your brain and find it out basically. Okay, sir, point is clear. Number one, what did I say? Number one, whatever I have gone ahead and given you of that open market value, that is not there. Then money, what you have given me, money plus fair market value of the additional consideration has to be taken. Okay, sir. If that is not there, then what I have gone ahead and supplied you of that like, kind and quality has to be taken. If that is not there, then sir, what you have given me, money plus whatever additional consideration you gave me of that value, I'll try to find out. Of the additional consideration value will be find out by taking 110% of your cost of acquisition. If that is also not possible, then sir, rule number 30. If it is not possible, then Baba go to 31. Always remember, you have to go sequentially. Okay, sir, point is clear. Now, value of supply between related person or distinct person. Related person, they have gone ahead and simply told, Ramesh, I went ahead and supplied some goods to my wife. My wife went ahead and paid me 1 rupee. Can I take that as the value? So they have gone ahead and made it very sure that, sir, when you are going ahead and providing some services or goods to your related person, always take open market value. If open market value is not there, second one is not there here. They have gone ahead and told, if open market value is not there, then please go ahead and take like, kind and quality. If that is not there, then Ramesh, take 110% of your cost of production or your cost of acquisition. If that is not possible, go to rule number 31. Rule number 31 goes ahead and says, please go ahead and apply your brain residual method. Okay, sir, point is clear. Chalo, let's go ahead, go to the next one. Now, rule number 28 is applicable in case of related person, but rule number 28 is not applicable if it is agent related. Agent, sole agent or any agent. Agent ke liye always you have to go ahead and apply value of supply of goods made or received through agent. You always have to take this value. Sir, now remember always, yes sir, when open market value is of the goods is given, take the open market value. For an example, everyone listen to me very carefully. This is my agent. I am the principal. I went ahead and supplied him some goods. Okay. Now he is my agent. I am the principal. they are going ahead and telling value of supply between principal and agent always has to be taken the open market value. For an example, the open market value of something which I have supplied him almonds, and the open market value is 4,500. Okay, sir, done. Then they are going ahead and telling take the open market value, or option is given to you. You can take 90% of the price charge for like, kind and quality for supply of goods of like, kind and quality by the recipient to his customer who are not related person. Agent, supposingly one more person is a principal who is going ahead and supplying to this agent, and this agent is going ahead and supplying to customers, and these customers are not his related person. Agent is going ahead and charging his customers might be 6,000 rupees. Then they are going ahead and telling of the like, kind and quality item when the agent is supplying, how much is he charging? 6,000. Of that you can take 90%. 90% of 6,000 is 5,400. You tell me your value of supply, you will take 4,500 or 5,400. What do you think you will be taking your value of supply as, everyone? Quickly tell me. Sir, we will be taking definitely whichever is lower only. No, you will always try to take whichever is lower. It is always at your option. So 4,500 or 5,400. Yes, sir. Point is clear. See over here, everyone. It says open market value or option is given 90% of the price charge for supply of goods of like, kind and quality by the recipient to his customer, and customer should not be related person. You should always supply ka value. What will you take? You will take always whatever is lower. Yes, sir. I will take whichever is lower because I should not be paying more taxes. So you will always try to take whichever is lower. Okay, sir. If that is not there, then you have to go to 30 and then 31. Everyone listen to me very carefully. 31 May, there is a proviso which says that in case of supply of service, if you want, you can always take 31 first and then you can come to 30. They have gone ahead and told in case of supply of service, supplier may opt to apply for rule number 31 first before going ahead and applying rule number 30. Now, in 28, in rule number 28, there are two provisos which are given, which goes ahead and says, sir, if goods are further supplied by the recipient as such, I went ahead and supplied to someone and he is going to supply as such, then they are telling value at the option of the supplier is equal to 90% of the price charge for like, kind and quality by the recipient to his customer. Whatever like, kind and quality ke liye the recipient is charging his customer, of that 90% can be taken as the value of supply if the recipient is going to supply the goods further as such. For an example, I went ahead and supplied to someone and that recipient is a related person or distinct person and he is going to supply the goods as such. Then whatever the price is going to charge to his customer, of that 90% shall be taken as the value of supply between me and the person who is the related person. Okay, sir. Point is clear. Next. Sir, if the recipient is eligible for full ITC, then the value declared in the invoice shall be deemed as the open market value. For an example, I went ahead and supplied to my distinct person and my distinct person is taking the input tax credit or my related person is taking the input tax credit. They are going ahead and telling when he is taking the input tax credit, in that scenario, Ramesh, whatever you go ahead and declare in the invoice, that shall be taken as the open market value, and if it is the open market value, that will become the value of supply. Okay, sir. Point is clear. If recipient eligible for full ITC, then the value declared in the invoice shall be deemed as the open market value. Yes, sir. Point is clear. Chalo, let's go ahead. Everyone over here, remember always, rule number 28 is very, very important for the exam. Okay, sir. What did I go ahead and tell you till now? I went ahead and told you section number 15. Section number 15, one transaction value is equal to value of supply. Section number 15.2 went ahead and told. Section number 15.2 went ahead and told, sir, TOPIICS topics to be included. Section number 15.3 went ahead and told discount given before, excluded discount given after. Early condition met, then you have to exclude, otherwise do not exclude it. Yes, sir. Point is clear. Section number 15 went ahead and told valuation rule can be applied if section number 15.1 may you are not able to determine the value. Section number 15.4 went ahead and told 27, 28, 29, 30 and 31. See over here, everyone. Open market value is not there, then money plus fair market value. If that is not there, like, kind and quality. If that is not there, then money plus additional consideration ka value you have to find out by applying 30 and 31. Here open market value, then sir like, kind and quality. If that is not there, then please come to 30 and 31. Here remember two provisos are there. Yes sir, if the recipient is going to supply the goods as such, then whatever is charging his customer, of that 90% shall be taken as the value of supply. Okay sir, this is clear sir. If the recipient is eligible for full ITC, then whatever I declare in the invoice shall be taken as the value of supply. That will be the open market value, and open market value becomes the value of supply. 29 says open market value or 90% of the like, kind and quality. If that is not possible, 30 and then 31. 31 may there is a proviso which goes ahead and says in case of supply of service, you can go ahead and apply 31 and then you can apply 30. Sequence can be changed. That is being told. Now, there is one more valuation rule which is given. Valuation rule number 31A. Everyone please come to the top. 31A valuation rule. Value of supply with respect to lottery, betting, gambling and horse race. In this scenario, they have gone ahead and told what shall be the value of supply in case of lottery, betting, gambling and horse race. They have gone ahead and told lottery ka case mein always assume the value to be inclusive of 28% GST. It says 100 divided by 128. Remember always 100 divided by 128 multiplied by the fair market value of the ticket or the price notified in the official gazette, whichever is higher in between these two. For an example, the fair market value is 100, price notified in the official gazette is 110. You take 110 over here divided by 128 multiplied by 100. ठीक है sir, point is clear. We will remember, always remember this. Sir, in case of lottery, if the fair market value is face value is given as 100, official gazette mein the price notified is 110, you just have to do 110 divided by 128 into 100, you will get the value of supply of the lottery. ठीक है sir, point is clear. Then the next one, betting, gambling, horse race. In case of betting, gambling and horse race, whatever is the amount of bet, on that the GST shall be charged. So sir, always 100% face value of the bet or amount paid into the machine, whatever amount you have put into the machine for betting, that shall be taken as the value of supply. Okay sir, point is clear. Everyone, what did I tell you? I went ahead and told you rule number 31, which is applicable for lottery, betting, gambling and horse race. In this scenario, 100% of the face value becomes the value of supply. Here, whatever is the face value or the price notified, that is inclusive of 28%. Always remember that. Done sir, point is clear. Let's go ahead to the next one. 1 minute everyone. The next one over here is this chart. Yes. Chalo. The next one over here is rule number 32. Everyone listen to me very carefully. Now rule number 32 is optional valuation method. Optional valuation method which has been notified with respect to certain supplies. Important for the exam because what they go ahead and do is big question they will put a small part. In a big question, they will go ahead and put a small part. Okay, sir. Point is clear. That is rule number 31. I have already told no rule number 31. Yes, sir. Rule number 31 is already 31A is already done. ठीक है. चलो 31A. Okay, Baba. 31A done. Students are telling sir 31A. 31A. Yes, Baba. 31A. Chalo. Now we have rule number 32 which is there. Please come to rule number 32. Bharat says, sir, when will you take GST for CA Inter? Bharat. Stay connected with the channel which is the Telegram channel for CA Inter student. Announcement will come very soon for amendment also and for revision also. Announcement will come very soon. ठीक है sir, done. For CA Inter I am telling. ठीक है. Now let's go ahead. Rule number 32 now. Everyone listen to me very carefully. Rule number 32 which is there talks about optional valuation method with respect to certain supplies. Government have gone ahead and told with respect to certain supplies we will give optional valuation method, and rule number 32(1) is telling that only, that it's a optional valuation method which is there. If you want you can go for normal valuation method which is section number 15(1) sir, or you can come to rule number 32 also. Rule number 32 may sub rule 2 talks about a person who is a money changer, purchase or sale of foreign currency. So if a person is going ahead and buying and selling foreign currency, for him either he can go for a normal method or he can also come over here in the optional valuation method. Optional valuation method may there are two methods which are given. The first method is over here. It says if the currency involved in is INR, is the currency involved INR? Is INR involved? Yes sir, INR is involved, means foreign currency to INR you are converting, or INR to foreign currency you are converting. For an example, there is a money changer who is there. Money changer say you went ahead and told him, sir, I want $1,000. Listen to me very carefully. You told him I want $1,000. On that day, RBI reference rate per dollar is 71 rupees, means he can purchase for 71. He will definitely sell you for more than 71. Yes, sir. So he went ahead and sold you for 72 rupees. His purchase price was 71. So selling price was 72. He purchased it for 71. Then 1 rupee he made. $1,000 he gave you. Can you tell me what is his value of supply, everyone? Can you tell me what is his value of supply? His value of supply is 1,000 rupees. It means he will go ahead and tell you 72 into 1,000 rupees. You have to go ahead and give him 72,000 rupees in the whole transaction. He bought for 71,000 rupees and he went ahead and sold you for 72,000. 1,000 rupees he made. Margin becomes the value of supply. That is what is being told. See over here, everyone. RBI reference rate, is it available? Yes, sir. Then just go ahead and take selling price minus the RBI reference rate which is there, multiplied by the currency which he went ahead and exchange. Selling rate minus the RBI reference rate multiplied by the currency exchange, that will give him the value. Sir, if he is going ahead and buying, for an example, you went ahead and told him, sir, I will go ahead and give you $1,000. He will tell, okay, he is the money changer. He will go ahead and buy. He went ahead and saw RBI reference rate today. RBI is selling at 71 rupees. Then what will he go ahead and do? He will tell you, sir, I will buy for only 70 rupees. So 71 rupees is the RBI reference rate. He is buying for only 70 rupees. 1 rupee per dollar he made. So sir, 1 rupee per dollar into $1,000 he bought. So 1,000 rupees he made. That's all you have to remember. Sir, that is what is being told over here. Or you can go ahead and take the RBI reference rate minus the buying rate which is there, multiplied by the currency exchange, and you will get your value of supply. Okay, sir, point is clear. Now, sir, what if RBI reference rate is not available? Then just do one thing. Whatever is the INR involved. For an example, here you have he has gone ahead and given you $1,000 and you have gone ahead and given him 72,000. Today's RBI reference rate is not available. Then 72,000 into 1%, whatever is the INR given or received of that 1% will become the value of supply. Yes sir, point is clear. Means 720 rupees 1% over here, if I am not wrong. Yes sir, point is clear. It says 1% of the INR received or paid. Whatever the INR he has paid you or whatever the INR he has received, of that 1% becomes his value of supply. Sir, for an example, currency involved, INR is not involved only. He has gone ahead and given you dollars, you have gone ahead and given him pounds. Sir, whatever the dollars he has given you, money changer went ahead and gave you dollars, you went ahead and gave him pounds. Sir, whatever is the dollar, supposingly he has gone ahead and given you $1,000, you have gone ahead and given him 700 pounds over here. Both you have to go ahead and multiply it by the RBI reference rate, convert it into INR. Whichever is the lower amount of that 1% has to be taken as the value of supply. See, currency 1 dollar, currency 2 pound, multiplied by RBI reference rate. Both you have to go ahead and see whichever is the lower amount of that 1% will become the value of supply. Yes sir, point is clear. The second method which is there, which can also be followed by a money changer, is slab method. So sir, if the currency he has gone ahead and exchange is up to 1 lakh rupees, for an example, you went ahead and gave the money changer 70,000 rupees, then they are going ahead and telling 250 rupees is the minimum value of supply he has to go ahead and declare, or 1%, whichever is higher. If he has gone ahead and exchanged supposedly 5 lakh rupees, first 1 lakh ke liye it is 1%, and then after that the 4 lakh rupees which is there, for that they are going ahead and telling 0.5%. Sir, so 1 lakh to 10 lakh. Up to 1 lakh, I have already told you 250 or 1%. After 1 lakh, up to 10 lakh means 9 lakh rupees ke liye, they have gone ahead and told 0.5%. Sir, after 10 lakh, greater than 10 lakh, if he is doing the money changing, then remember 5,500, which is basically 1,000 rupees plus 9 lakh into 0.5, 4,500 rupees. So it is 5,500, and greater than 10 lakh, whatever the amount is there, for that 0.1%. Always remember, money changer ka maximum value of supply will be shown as 60,000 if this method is being followed. Yes sir, we are clear. Remember this always. Okay sir, point is clear. Now, Secondly, if there is an air travel agent, Baba, I'm telling you, rule number 32, I've seen sometime they go ahead and ask a small part, so be very careful in your exam. Sir, if there is an air travel agent, what will happen in case of air travel agent? Value of supply is equal to domestic booking. If he has gone ahead and done domestic booking ka 5% of the basic fare can be taken as the value of supply. International bookings ka 10% of the basic fare can be taken as the value of supply if he wants to go ahead and opt for this option. Otherwise, actual commission also he can go ahead and declare as the value. Okay, sir. Basic fare. What do you mean by basic fare? Basic fare means the amount on which the airlines pay commission. That is the amount excluding charges and taxes. Okay, sir. Point is clear. 32.4 goes ahead and talks about life insurance business. What does a life insurance company do? They go ahead and assume the risk of your life and you go ahead and pay them a premium. For an example, they are going ahead and assuming the risk of your life entirely. The policy is life coverage only. Then, sir, in that scenario, the entire amount of premium which you pay becomes their value of supply. So, it is being told over here, there can be various types of policies, but if a life insurance policy is covering only risk, they are taking the risk of my life and I am going ahead and paying it a premium, then the entire amount is towards the service and it will become the value of supply. Sir, what if they are going ahead and giving you a saving policy where they are assuming the risk of your life also, plus they are going ahead and doing some investment also? Always remember in this scenario, value of supply, whatever is the premium they are charging, they charge me 10,000 rupees, 4,000 they invested on my behalf. How much is the value of supply? Can you guys tell me? 10,000 they charge me, 4,000 they invested on my behalf. What is the value of supply? Can you tell me, everyone? Sir, if they went ahead and charged you 10,000, 4,000 they invested on your behalf, 6,000 becomes the value of supply amount invested. Sir, if it's a single annuity policy, always remember, single annuity policy ka case mein 10% of the premium becomes the value of supply. For an example, I went ahead and told one life insurance company, I want a single annuity policy. They charge me 1 lakh rupees. 1 lakh rupees ka 10% will become the value of supply. Okay, sir. Any other case, this sometimes comes in the exam, so be very careful. If it is not only risk policy, sir, supposingly the amount invested is not told to you, then what will you do, everyone? Sir, then they are going ahead and telling all other cases may 25% whatever they are going ahead and charging you. For an example, I took a life insurance policy. I don't know what is the investment they are going to invest on my behalf. That is the scenario when they are going ahead and telling. So supposingly one life insurance company is going ahead and selling life insurances and they have not told their customer what is the amount they are going to invest on their behalf. In that scenario, whatever the life insurance company is charging, of that 25% in the first year becomes their value of supply. From second year, 12.5% of the premium shall become the value of supply. Please be very careful in the exam. Next. Sir, if there is a person who is going ahead and buying and selling second-hand goods, for an example, I am buying and selling second-hand goods, then they are going ahead and telling if ITC has been taken, yes sir, ITC has been taken, then the value of supply is always the transaction value. Take the ITC, charge GST on output tax liability, output input set off and pay the GST to the government. Normal method that is. But if you are a second-hand goods seller, then whatever is the selling price. For an example, you bought a fridge, second-hand fridge you are selling for 4,000. Purchase price, Baba, don't take cost. Take purchase price. You had purchased it for 3,500. Repairing cost is not included. Purchase price only has to be taken. Be very careful. They have given purchase price. So 4,000 minus your 3,500. 500 rupees will become your value of supply. If a person is into buying and selling second-hand goods, for them government have gone ahead and told, if you are taking ITC, then to normal valuation method, whatever is the sale value, transaction value, where you have to go ahead and calculate the GST, set up your input tax credit, story over. But if you want, you can go ahead and follow marginal method also. Always remember, he went ahead and bought the fridge for 4,000 rupees, sold it for 3,000. Can you tell me what is the margin? Here the margin is negative. Whenever the margin is negative, then there is no GST which shall be payable by that second-hand goods ka seller. Always remember one thing, repossessed goods. What do you mean by repossessed goods? For an example, I am a bank. Everyone, I am a bank. I have gone ahead and repossessed the goods. For an example, Vishal is there. Vishal went ahead and took one bike on loan from the bank. Now he is not paying the EMI only. Bank repossessed the bike and bank went ahead and sold the bike. In that scenario, supposingly bank went ahead and sold the bike for Bank went ahead and sold the bike supposingly for 80,000 rupees. What is the purchase price of the bank? They are going ahead and telling whatever price the original buyer had taken it. Supposingly this guy had gone ahead and taken the bike for 1 lakh rupees minus 5% per quarter or part thereof you have to take until the date of sale, and once you go ahead and reduce this 5% for the per quarter or part thereof, whatever the value will come, that will become the purchase price of the bank. And then sir, over here you will see the margin has come. For an example, I will go ahead and give you an example. For an example, on 1st of January, Vishal had gone ahead and taken 1 lakh rupees ka loan from the bank and taken a bike. 1 lakh rupees ka bike he has taken. Bank went ahead and repossessed the bike on 30th June because he did not make the payment. After 6 months only he did not make the EMI ka payment, so bank repossessed it. Bank went ahead and sold on 30th of June. The 30th of September bank went ahead and sold the bike. Now what is the purchase price which has to be taken if the selling price of the bike is 80,000 rupees? Can you tell me the purchase price, everyone? What is the purchase price of the bank that is to be taken? Repossessed goods ka case mein, what is the purchase price that has to be taken? What will be the purchase price of the bank that has to be shown? Can you tell me? Selling price over here is 80,000 rupees. Can you tell me what is the profit the bank has gone ahead and made? On what amount the bank has to pay GST? Sir, everyone listen. 1 lakh rupees was over here. 1 lakh minus 5% per quarter part thereof. January, February, March, 1 quarter. April, May, June. Always remember, quarter is fixed. There is no part quarter. Quarter is always fixed. April, May, June, July, August, September. No. Jan, Feb, March, April, May, June, July, August, September. 3 quarters gone. So 1 lakh minus 5% into 3 quarter, 15% gone. It means 85,000. Bank is selling for 80,000. 85,000 is the purchase price. Baba, is there any amount on which GST is to be paid by the government? Sir, here margin purchase price is only showing as 85,000. Selling price is 80,000. If it is negative, then nothing has to be paid by the bank. Everyone see over here. Purchase price of the defaulting borrower minus 5% per quarter or part thereof from the date of purchase till the date of disposal. You have to take from the date of purchase till the date of disposal. You have to see. Always remember in your exam, till the date of disposal has to be seen. Okay, sir? Point is clear. Next, 32.6 goes ahead and says, if I have gone ahead and given some vouchers, coupons, etc., then they are going ahead and telling value of token, coupon, stamp, etc., which you have gone ahead and given. Supposingly, I went ahead and gave some people I went ahead and gave some coupon, etc. Then they are going ahead and telling money value of the goods that can be redeemed against such token or voucher will become your value of supply. As of now, not important at all. Next, 32.7 goes ahead and says, if one bank is going ahead and supplying to another bank, for an example, some services, government says, if we notify banks, then whatever is the value of supply, that will be, value of supply can be taken as nil also. For an example, one bank is going ahead and supplying some services to another bank. This is State Bank of India, this is also State Bank of India. They are distinct person. The value of supply can be taken as 0, but provided this service has been notified by the government. As of now, nothing has been notified. Value of supply to distinct person. In case of notified supply, value of supply can become as nil if ITC is available, but listen to me very carefully. As of now, nothing is notified. Okay, sir? Point is clear. Everyone listen to me very carefully. Section number 15, I started. Section number 15.1, transaction value. Section number 15.2, topics. Section number 15.3, sir, discount. Discount is to be included or discount is to be excluded ka story. Section number 15.4, 27, 28, 29, 30 and 31. Then we went ahead and learned rule number 31A also. We went ahead and learned rule number 32. Very, very important for your exam is rule number 32. Okay, chalo. Let's go ahead and now learn rule number 33 over here. Rule number 32 I went ahead and told you. Rule number 33. For an example, For an example, one student came to my class. He went in and told, sir, are you going to the ICI tomorrow? I told, yes, yes, I'm going to the ICI. He told, sir, outside there is a bookstall. No, can you buy one book for me and get it? I went in and told, okay, fine, no problem. I went to the bookstall. I bought a 500 rupees ka book and came and gave it to the student and took my 500 rupees. In this scenario, my class ka sale was 10,000 rupees ka class which I gave to you. Plus I bought a 500 rupees ka book for you and gave it to you. Will that 500 become my value of supply? Arey, that is not at all my value of supply, because my heart was pure. I was just acting as a pure agent on your behalf. I bought the book and gave it to you. The invoice also I took in your name. I never had any intention to go ahead and use the book for my behalf. It was never used by me. In this scenario, government is going ahead and telling, sir, whatever is the amount which you have gone ahead and collected from your customer, but for acting as a pure agent, because your heart is pure, you did not have any intention to make any money over there, that amount shall be excluded. Please be very careful in the exam over here. Rule number 33, deduction of expenditure incurred by pure agent. Expenditure or cost incurred by a supplier as a pure agent shall always be excluded from the value. Condition is supplier acts as a pure agent of the recipient. Payment separately indicated in the invoice. Supplies procured from third party are in addition to the services supplied on his account. Those are additional services which I am providing you, but that is not my supply. Done, sir. Here there is a circular which I want to go ahead and talk about. Listen to me very carefully. This is airline company, Indigo airline. Okay. This is supposedly one passenger. Okay, sir. Passenger is there. This is airport authority of India. Supposedly this is an airport operator. Airport operator means basically those people who operate an airport, who manage an airport. For an example, you are going from an airport, you will be using the washrooms over there, you will be using the water facility, you will be using the charging facilities, etc. So airport operators manage the airport. For managing the airport, basically they are going ahead and providing you various services. Yes, sir, because you go to the airport, you use various services at the airport. So airport operators are basically going ahead and providing you various services. For those various services, airport operators have to go ahead and collect passenger service fees and user development fees, because they are going ahead and providing you the services. But you know what happened? Airport operators, have you ever seen airport operators stopping you? Hey, give 200 rupees, give 250 rupees. No, they will not stop you and ask money over there. In this scenario, what happened? This PSF and UDF is collected through the airline company by the airport operator. So you will go ahead and give, supposedly to the airline company, 10,000 rupees for your ticket, 250 rupees passenger service fees or user development fees will be collected, and they will go ahead. They are acting just as a pure agent, collecting and giving it to the airport operator. The first question which came, does airport operator on this 250 rupees collected have to go ahead and pay GST to the government? Government went ahead and told, very simple, when service is provided by the airport operator to this customer, basically all this KIAL, you will see DIAL, all this airport, Delhi International Airport Limited, if I am not wrong, the full forms, etc. So all these are airport operators who manage the airport. They are providing you the services. When they are going ahead and providing you the services and passenger service fees is being collected, on this passenger service fees, GST has to be paid by the airport operator. If generally what happens, PSF may, they don't go ahead and separately collect GST. In that scenario, the GST assume that it is inclusive of GST and GST has to be paid to the government. Okay, sir. Secondly, Indigo airline, what is the service they have gone ahead and provided? They have gone ahead and acted as pure agent. Might be airport operator will go ahead and pay them 5 rupees or 10 rupees. Always remember, when they are acting as pure agent, they are also providing a service, and might be for providing the service they are charging 5 rupees. So 5 rupees plus GST, whatever is the GST, they will go ahead and charge. Airport operators, whatever GST charged by the Indigo airline for acting as pure agent, that ITC they can go ahead and take it. Okay, sir, point is clear. So that is what is being told over here. Passenger service fees and user development fees are levied. People, quickly tell me, did you understand passenger service fees and user development fees? Sir, passenger service fees and user development fees are levied by airport authority. Who are going ahead and levying? The airport authority through airlines. They are levying through airlines because airport authorities can't directly collect, and hence Who are acting as pure agent? Yes, sir. The pure agent acting is done by Indigo Airlines, basically the airline operators. Okay, sir. Point is clear. Passenger service fees and user development fees are consideration for service provided by the airport authority. So, airport authority is going ahead and providing the service, and they are going ahead and collecting what? Passenger service fees and user development fees. Then, 1 minute. Huh. And leviable to GST means they have to go ahead and pay GST on this. Okay. Then airline acting as pure agent should separately indicate PSF and UDF and applicable GST in the invoice. Sir, when they are going ahead and issuing the invoice, in the invoice, whatever passenger service fees, user development fees is there, they should indicate separately. Plus GST, if anything they want to charge separately, that should also be indicated. Okay, sir. Based on the invoice, the passenger or the recipient may avail ITC of the GST paid. So, if GST on this plus GST on this is shown separately, whoever is the passenger who has bought the ticket, if he is using it for his business purpose, both the GST ka credit also he can go ahead and take. But generally, PSF and UDF pay, GST is not shown separately. When GST is not shown separately, the passenger can't take the input tax credit. Okay, sir, point is clear. Let's go ahead next. 34 goes ahead and says, sir, whenever it is supposedly importation of service, in that scenario, importation of service ka case mein, sir, rate of exchange, which one will apply? They have gone ahead and told rate of exchange for determination of value, taxable goods or services. Goods ka case mein take the rate as CBIC notified rate, and services ka case mein take the gap rate which is there. Okay, sir. Rate notified by CBIC under section number 14 of the Custom Act. On which date, sir? Which date ka rate? You have to take on the date of time of supply of the goods. Sir, in case of services, on the date of time of supply of services. Time of supply will be reading little later. Section number 35 goes ahead and says, whenever the amount is inclusive, how to make it exclusive? Sir, whatever is the value which is inclusive, divided by 100 plus applicable GST rate, multiplied by GST rate will give you the tax amount. Sir, value of supply, whatever is the amount value, divided by 100 plus rate, multiplied by 100 will give you the value of supply if the amount is inclusive. How to make it exclusive is being told. The next one over here is some circulars which are given. Staggered discount, buy more, save more. Supposingly, I have gone ahead and issued discount saying buy more, save more. Buy for 1,000, you will get 10%. Buy for 2,000, 20%. Buy for 3,000, 30%. So, staggered discount. What is the problem? Staggered discount is shown in the invoice and it is to be excluded from the value. It is telling, sir, generally shown in the invoice to be excluded from the value. Then, periodic or year-end discount. Baba, always remember year-end discount. You will exclude from the value only if early condition is satisfied. Early condition not satisfied, not to be excluded. Then secondary discount. What is secondary discount? I went ahead and sold you some biscuits. Supposedly 10 rupees I sold you some biscuit. 1,000 biscuit I sold you. Later I was going one day. You saw me. Hey, Ramesh sir, you come here. I told what happened. You sold me 1,000 packets of biscuit. Not even dogs are eating those biscuits. What should I do? I told, okay, don't worry. I'll give you 2 rupees extra discount. Tell me one thing, was there an agreement already there for that discount? Sir, agreement was not there, and hence the discount which I have gone ahead and given you later is known as a secondary discount, and secondary discounts are not excluded from the value. Sir, it is not excluded. Then business facilitator, business correspondent model. Everyone listen to me very carefully. Here there is a bank. Here there is a business facilitator or business correspondent, and here there is a customer. Listen to me very carefully. Bank goes ahead and provides the services to the customer through the business facilitator. Okay, and customer goes ahead and pays the bank. The question which was asked was, sir, when the bank is going ahead and providing the services to the customer and customer is paying supposedly 100 rupees, will GST be charged by the bank on the entire 100 rupees? Yes, Baba. Bank has gone ahead and provided the services to the customer, and customer has gone ahead and paid supposedly 100 rupees to the bank. Bank is the service provider and bank should charge GST on the entire 100 rupees. Done, sir. Point is clear. Everyone over here. Banking company is the service provider liable to pay GST on the entire fees charged from the customer. Sir, what if customer paid him and he paid the bank? Arey Baba, in that scenario also, bank is the service provider. Entire amount which is charged from the customer, on that GST has to be charged by the bank. Done, sir. Point is clear. GST on delayed payment. For an example, there is one uncle. I told uncle, I want to give one phone to my girlfriend. Please give me a mobile phone. Uncle told, okay, I will give you the mobile phone. I went ahead and told uncle, take 40,000 rupees. Can you tell me what is the value of supply, everyone? My first question to everyone, what is the value of supply in this scenario? Uncle went ahead and sold me a mobile phone. Mobile phone ke liye uncle went ahead and charged me 40,000 rupees. What is the value of supply, everyone? The value of supply is the transaction value. Transaction value over here is 40,000 rupees. Everyone is clear? Quickly tell me. Yes, sir. We are clear. Okay. Now, the next question. For an example, this uncle over here, supplier, I went ahead and told the uncle, please give me a mobile phone. Uncle told, okay, take mobile phone. I told uncle, no money. But uncle told, no money. Then do one thing. Uncle told, no money, still honey is important. Please do one thing. Baba, everything told in classroom is only for classroom purpose and only for jokes purpose. Okay, sir. Now listen. Uncle ko he went ahead and told, uncle, I will give you 10,000 rupees every month. For 4 months, I will give uncle. I'll work hard and give it to you. Uncle told, okay. Along with this, you have to pay 1,000 rupees interest. Uncle told 1,000 rupees every month. I want interest. If you delay some month, I will take 500 rupees penal interest also. Now, my question to you guys is, what is the value of supply in this scenario? Interest, penalty, will it be included? Yes or no? Quickly tell me, everyone, what will be the value of supply over here? Assume that the amount is exclusive of GST. What is the value of supply? Sir, 40,000 plus 4,000 plus 500. You will say 44,500 becomes the value of supply. Yes, sir. Point is clear. Here, the value of supply will be 44,500. We have assumed that the interest and penalty is not inclusive of GST. Okay, sir. Point is clear. Now, uncle is over here. I went ahead and told uncle, please give me a mobile phone. Uncle told, okay, I will give mobile. But I went ahead and told uncle, I want to give an installment. Uncle told, no money, no honey, get lost. I told, okay, don't worry about it, uncle. I will do something. I went to Bajaj Finance and I told Bajaj Finance, do one thing. Give me a loan. Bajaj Finance gave me a loan of 40,000 rupees. I threw the check on uncle. I told uncle, here is your 40,000 rupees ka check. Now, listen to me very carefully. I went ahead and paid 10,000 rupees plus 1,000 rupees, 10,000 rupees plus 1,000, 10,000 rupees plus 1,000 over here, 10,000 rupees plus 1,000 rupees interest. My question to you guys over here is, in the first transaction, can you tell me what is the value of supply? In the first transaction, what is the value of supply? Tell me, sir, 40,000 is the value of supply. In the second transaction, my question to you guys is, over here, whatever interest is there, will the interest be chargeable to GST now? Will the interest be chargeable to GST now? No, sir. It is simple loan transaction for which you are going ahead and paying interest, and interest is exempted from GST. Yes, sir. Point is clear. See over here, everyone. If seller gives the EMI himself, seller is going ahead and giving you the EMI, additional or penal interest will form part of value. Sir, whatever is the amount of interest and penal interest which is being charged will form part of value. Okay, sir. But if third party finance company gives the EMI, means I have taken the loan from the third party and I am going ahead and giving him the EMI ka payment. In that scenario, penal interest which is being charged is exempted under entry number 27. Is the point clear to all? Yes, sir. Point is clear. The next one over here is works contract. For an example, one real estate builder is there. He went ahead and sold me a flat for 3 crore rupees. He went ahead and sold me a flat for 3 crore rupees. In this scenario, when he gives me an apartment, he gives me a flat. Flat ka case mein always remember, land is also there. So, sir, government have gone ahead and told 3 crore is the works contract ka charges we has taken. He has gone ahead and given you a flat. For the flat, he has charged you 3 crore. Land ka value, always assume 1/3, 1 crore rupees gone. And he'll always charge you GST only on the building amount, which is 2 crore rupees, the 2/3 amount. 1/3 always is assumed as the value of land. For an example, I sold you an apartment before completion certificate or first occupancy for 3 crore rupees. That 3 crore rupees may some part I have charged for land also. And hence government went ahead and told value minus one third consideration value of the land it is deemed, and remaining pay only GST has to be charged by the builder. Yes sir, point is clear. So whenever supposingly a builder sold your flat for 3 crore rupees, one third assumed as the value of the land, and only on 2 crore rupees he will go ahead and charge GST if any amount of consideration is received before completion certificate or first occupancy, whichever is earlier. Yes sir, point is clear. Here we are done with your chapter of value of supply. Everyone listen to me very carefully. A graded chapter this is. I believe one question to 100%. A plus graded chapter it is. They go ahead and ask questions on this also. They go ahead. They will ask question on this. This though you have to know only. They ask question on this provisos also. Be very careful. They also go ahead and ask question on rule number 32. They make it a part of a big question at times. Please be very careful. Yes sir, we are all clear. Here we are done with your chapter of value of supply, everyone. Quickly give me a heads up. Are we all clear? Now all you have to do is practice lot of question answers.